Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring, and today is Monday, April 22nd, 2024. Um, I usually just post my trades on Twitter and Facebook and in the groups that I'm in, just graphically, and then I do a little explanation of the trade. But this trade I took today really was so good. I thought I'd just do a quick little video to kind of explain my thinking and most likely why this trade worked out so well. But in my teaching and in my classes, on my podcast that I do on the weekend, I always talk about the importance of multiple time frames and trading the smaller time frame and looking to see what the larger time frame is doing. And today was such a good example. This is the daily chart of the Qs. And I mentioned this on my weekend review podcast, which comes out on Saturdays. And I was looking here for a daily swing trade. I was not looking for an intraday trade. But this is a good example of using multiple time frames, because today, well, first let me mention here, you see this highlighted blue box here that started back on 19th of January. Well, here is where you have a fair value gap here. And I was mentioning on the podcast, hey, listen, if we get back into this blue area, there should be some support. And actually there was. But I was trading intraday, and I just want to go through and show you what my thinking was. So I knew that on the daily, we were in this buyable area. Okay, we were in this buyable area. But during the day, when I day trade, I trade on the 5-minute bars. So here was the beginning of the day, the big gap up. Okay, I don't buy, people that listen to my channel, they know I don't buy anything up into these areas here. I want to buy in value or below value. Well, so we had this gap here, and it moved up for the first 15, 20 minutes, and then we came all the way back down. And generally, if you have a gap like this and it comes down to close the gap, that by itself is a decent area to potentially take a trade. But what happened was there were so many confluences here. We gapped up, we came down and closed the intraday gap. Okay, that's number one. But number two, this is the highlighted area that I was looking for back into January. So not only did we close the gap, we came into this large fair value gap back from January. So I knew right about here that I really wanted to start looking for a potential trade. We were also near the negative third ATR channel, which is also a decent indicator, because about 92% of the time when you get to the third ATR channel, it will stop going down, going back up. So there were all sorts of confluences here. You have the large fair value gap back from January. You had the close of the gap on an intraday basis. So as soon as we came back into this blue area, I had my finger on the button ready to buy. But just because it's in this area, I still need some type of signal or trigger to get me into the trade. Well, this happened here on this blue bar here with the V1. I use V1s, V2s a lot. Go to my YouTube channel, just look up V1s, V2s. I have a lesson on really what they are. But essentially, a V1 consists of two bars. Where you have bar 1, bar 2. Bar 2 goes under bar 1's low, closes above bar 1's close. And then my stop on that particular trade is just halfway of the washout bar, just halfway of this bar where I took it. So if in the future, if it had just closed below here, I simply would have been out for a very, very small loss. But the confluences were very strong, and look what happened. So one more time, this blue area band here is the large fair value gap on the daily time frames dating back to January. We had a gap up at the beginning of the day. We came back and closed the gap. That's one place to start looking for a trade. Came back into the daily confirmation. That's the second place to take a trade. And this is where I took the trade right here, 414.45, with an extremely small risk if I was wrong. But look at that. It took right on off. I always scale out a portion of my position as it moves up. Here, When we had our first close below the previous bar's close, I exited half the position at 416.58, and then I still had half. And then as it moved up on some of the big bars, I continued to take profits, continued to take profits, continued to take profits. And then this was my exit here. Why? Well, for a lot of reasons. We went over 70 RSI, under 70 RSI. We finally closed under the 5 EMA. These are all the exit techniques that I use in my trading. And if you'd like to learn more, I have a weekend review podcast that comes out every Saturday where I go into much more detail about these trades. But it was a fantastic trade, and it just highlights the importance of looking for multiple levels of support on multiple time frames. And I think this did a really, really good job. So out of half there at 416.58, out of half at 420.58 with an entry of 414.50. And again, my risk was, I don't know, 20 cents. That's correct trading there, everybody. Having a good risk to reward ratio, having big potential upside wins when you're right, and having very small losses when you're wrong. Be patient with those winners, be very impatient with the losers, and make sure you have a process that tells you what to do. All right. And like I said, come see me on the weekend on my weekend review podcast. I think you'll find it very helpful. But anyway, just wanted to put it out. Hope this was helpful. Thanks for watching, and hopefully we'll see you on Saturday's podcast. Take care, everyone. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.